Welcome to After the Bell, the Capitalist versus Consumers Daily Market Report. Here is everything that moved the market today, Wednesday, May 6, 2026. Today was one of the best days of the year so far. New all-time highs across the board, AMD surging 20%, Disney's new CEO delivering a standout earnings beat, and the most significant Iran deal progress since the conflict began. A lot happened today, and all of it matters for your money. This video is for educational purposes only and not financial advice. Please hit the like button and subscribe so you never miss a daily report. Let's get into it. The numbers at the close. Today was a powerful, broad-based rally. The S&P 500 surged 1.10%, closing at 7,338, a new all-time high. The Nasdaq jumped 1.39%, closing at 25,670, also a new all-time high. The Dow Jones Industrial Average gained 1.21%, closing at 49,854, within 146 points of the historic 50,000 threshold. The Russell 2000 Small Cap Index also participated meaningfully in today's rally. 20 of the 30 Dow components finished higher. All but two S&P 500 sectors were in positive territory. Industrials led the way up 2.7%, followed by technology up 2.2%, and materials up 2.1%. The only two sectors in the red were energy, down 4.2%, and utilities, down 1.2%. Energy falling sharply is actually good news, and we will explain why in a moment. The Iran deal. The story that changed everything. The dominant driver of today's massive rally was one story that broke before the market opened. Axios reported this morning that the White House believes it is getting close to a one-page memorandum of understanding with Iran to end the conflict and set a framework for more detailed nuclear negotiations. The report cited two U.S. officials and two other sources briefed on the situation. The U.S. expects Iranian responses on several key points within the next 48 hours. The report cautioned that nothing has been agreed yet, but the proximity of an agreement was enough to move markets dramatically. Here is what happened the moment that report hit. Oil collapsed. West Texas Intermediate crude fell sharply from $105, losing several dollars in a matter of minutes as traders priced in the prospect of the Strait of Hormuz reopening and global oil supply normalizing. And when oil falls, everything else tends to rise. Lower oil means lower inflation. Lower inflation means the Federal Reserve has more flexibility to cut rates. Lower rates are good for stocks, particularly growth stocks and rate-sensitive sectors. The math is that simple, and the market priced all of it in immediately. Energy stocks fell sharply, down 4.2%, because energy companies benefit from high oil prices, and a deal would reduce those prices. But every other sector celebrated. Consumer discretionary, industrials, technology, financials, all finished meaningfully higher. This is the most significant Iran development since the conflict began. It is not a deal yet. The report specifically said nothing has been agreed. But the fact that both sides appear to be within 48 hours of a framework is the most concrete progress the market has seen, and it responded accordingly. AMD, the chip story of the year. Advanced Micro Devices delivered one of the most impressive single-stock performances in recent memory today. AMD surged between 16 and 20%, its best single day in years, after last night's blowout earnings report and an extraordinary guidance update. Here are the numbers that drove the move. AMD reported first quarter revenue of $10.25 billion, beating the $9.89 billion estimate. Adjusted earnings per share of $1.37 beat the $1.29 estimate. Revenue grew 38% year over year. But the real story was the guidance. AMD guided for second quarter revenue of $11.2 billion, dramatically above the analyst estimate of $10.52 billion. That $700 million guidance beat is exceptional for a company of AMD's size. CEO Lisa Su went on CNBC and explained the reason for the massive guidance revision. She cited agentic artificial intelligence, AI systems that can autonomously take actions and make decisions rather than just responding to prompts, as driving a surge in demand for central processing units. She said the demand picture became dramatically clearer over the last 90 days after conversations with the company's largest customers. This is an important signal. The market has been worried since the OpenAI revenue miss last week that AI demand might be cooling. AMD's results, and Lisa Su's comments specifically, are the strongest counter-argument available. Enterprise customers are not pulling back on AI spending. They are accelerating it. Agentic AI represents the next wave, and AMD is positioned directly in its path. The VanEck Semiconductor ETF, which tracks the chip sector as a whole, jumped 4% today. Intel climbed 2%. Micron rose further, extending its recent run. The chip sector is the clear leader of this market. Walt Disney. New CEO, strong results. Walt Disney delivered a standout earnings report this morning, and the stock surged between 6 and 8% on the day. But there was a storyline beyond just the numbers. This was the first earnings call for new CEO Josh D'Amaro, who took over from Bob Iger earlier this year. Here are the headline numbers. Disney reported revenue of $25.117 billion, beating analyst expectations. Adjusted earnings per share of $1.57 beat the 1.49 consensus estimate. The company raised its full-year adjusted EPS growth outlook and increased its share repurchase target to at least $8 billion for the fiscal year, up from $7 billion previously. It also guided for double-digit adjusted earnings growth in fiscal 2027. The drivers of the beat were streaming and theme parks. Disney's streaming business achieved double-digit operating margins, a milestone the company has been working toward for years. Theme park performance was strong, with operating income exceeding prior guidance despite a 1% decline in domestic attendance from fewer international visitors. D'Amaro's inaugural earnings call was well received. He articulated a clear vision: creative excellence, streaming growth, and continued expansion of the experiences business. He wants to transform Disney Plus from a video repository into an immersive platform where subscribers also buy merchandise and book park trips. He also signaled major capital investment ahead, expanding the cruise fleet from 8 to 13 ships by 2031 and significant park expansions in Orlando, Shanghai, and Anaheim. Importantly, D'Amaro's vision connects directly to the broader AI theme. Disney is using artificial intelligence to build hyper-personalized recommendation engines for Disney Plus and ESPN, and dynamic ad targeting for advertising partners. Even entertainment is now an AI story. Uber. The consumer is still spending. Uber delivered a strong quarter this morning, beating earnings estimates and providing an important read on consumer behavior. Uber reported revenue that beat analyst expectations, with CEO Dara Khosrowshahi noting that higher oil prices and geopolitical uncertainty are doing remarkably little to slow consumer spending on rides and food delivery. Trips grew meaningfully year over year. The delivery business remained robust. This is the second major data point this week, after Visa's blowout results last week, confirming that despite record low consumer sentiment, Americans are still spending. They may feel bad about the economy, but they are still ordering food, booking rides, visiting theme parks, and swiping their credit cards. That resilience is what is supporting earnings growth across multiple sectors. Supermicro surged nearly 15% today after reporting earnings that beat estimates despite missing on revenue. Fourth quarter guidance was the real driver. The company guided for 65 to 79 cents adjusted EPS versus the 55-cent analyst estimate, and revenue guidance of $11 to $12.5 billion. Supermicro is a key beneficiary of AI data center build-out as a server manufacturer, and today's results confirm that demand for its products remains extremely strong. What to watch tomorrow and Friday? Tomorrow brings a busy earnings slate including McDonald's, Coinbase, Airbnb, and CoreWeave, the AI infrastructure company that went public recently. Any commentary from these companies on consumer behavior and AI spending will add important data points to the picture. Friday is the most important economic data release of the month, the April non-farm payrolls report. This is the jobs report. The Federal Reserve is watching labor market conditions closely as it decides whether to cut rates later this year. A strong jobs report means the economy is healthy, but could also mean the Fed keeps rates higher for longer. A weak jobs report raises recession concerns, but could accelerate rate cut expectations. Either way, Friday's number will move markets. The Iran situation. What happens next? The Axios report said the U.S. expects Iranian responses on several key points within 48 hours. That means by Friday or Saturday, the market should have a clearer picture of whether a framework agreement is actually within reach. If a deal is confirmed over the weekend, expect a powerful market rally on Monday. Lower oil prices, lower inflation, potential for Fed rate cuts, and a significant reduction in geopolitical risk would all hit simultaneously. If negotiations break down, expect oil to spike again and the market to give back some of today's gains. This remains the single most important wildcard for markets right now. Watch for any developments over the next 48 to 72 hours very closely. The bottom line for everyday investors. Today was the kind of day that reminds long-term investors why staying invested matters. The market opened with Iran deal hopes and never looked back. New all-time highs. AMD delivering one of the best single stock performances of the year. Disney's new CEO making a strong first impression. The consumer continuing to spend despite every reason not to. For mortgage borrowers, oil falling today means some relief in mortgage rates ahead. Not dramatic relief, but directional improvement if the Iran deal materializes. For investors, all-time highs can feel like a bad time to invest. But history shows clearly that investing at all-time highs produces perfectly acceptable long-term returns. Records are meant to be broken, and the S&P 500's history is one of record after record after record over long time horizons. Stay diversified, stay consistent, and watch the Iran developments very closely over the next 48 to 72 hours. That is your After the Bell report for Wednesday, May 6, 2026, here at Capitalists versus Consumers. Please hit the like button. It helps more people find this content. Subscribe and turn on notifications so you never miss a daily report. This Friday after the close, we do our full weekly breakdown. And with the jobs report, the Iran deal update, and everything from this week, it is going to be a major episode. We will see you at the closing bell tomorrow. Recommended reading for investors: The Psychology of Money by Morgan Housel. The Little Book of Common Sense Investing by John Bogle. A Random Walk Down Wall Street by Burton Malkiel. This video contains affiliate links. I may earn a small commission at no extra cost to you.